Setting financial goals is the first step in creating a solid financial strategy. Whether you want to save and invest enough to retire early or simply build up an emergency fund, the appropriate financial strategy can help you get there. If you're not sure which strategies will work best for you, here are 10 ways to increase your chances of financial success. Hello everyone, and welcome to a brand new video on the channel. Today we are going to talk about the best personal finance strategies. Before we get started with the video, don't forget to smash the like button, share the video, and subscribe to the channel. Now let's get started. Number 10. Get professional financial advice. It can be beneficial to have an objective view of your financial goals from time to time. Consider visiting a financial expert if you are having difficulty determining the best tactics and activities to take to achieve your goals. An advisor can assist you in assessing your present financial situation and setting realistic goals for the time and assets you have available. And if you stray off track, they can help you get back on track. Number 9. Increase your cash flow. Another financial method for achieving your financial objectives is to increase the amount of money you have to devote to them. There are various options for doing so, including asking for a raise at your current employment, pursuing a promotion, working a part-time job, or launching a side business. Consider which avenue will give the most return on investment as you decide how to improve your income. Working an extra 20 hours per week at a part-time job on top of your normal 40-hour job may not be worth the time if it only slightly increases your income flow. Number 8. Diversify your investments. You can manage risk while staying on track by diversifying your investment portfolio. It keeps you from investing too much of your portfolio in a single type of security, reducing your long-term return potential. Number 7. Understand the value of time. The sooner you start working on your savings and investment goals, the better. For example, the optimal time to start saving for retirement is just after you start your first job. Whether your employer offers a plan or not, an individual retirement account can help you grow your savings tax-free. Number 6. Leverage free money. Employer-sponsored retirement plans and health savings accounts, HSAs, provide what may appear to be an impossibility: free money. Taking advantage of matching contributions on these types of plans is a simple method to increase your savings and attain your financial goals faster. Make sure you're contributing to a sponsored retirement plan and an HSA if your company provides them. Then see if your company will match your contributions. Consider increasing your elective deferral rate to earn the entire employer match. Number 5. Put financial goals on autopilot. One of the best tools for managing money and making progress on your financial strategy is automation. When you set up automatic transfers from your checking account to a savings account, for example, you may watch your money increase without having to do any heavy lifting or risk spending elsewhere. Automation might also be advantageous if your goals include debt repayment. Setting up bi-weekly automated credit card payments might help you pay down the balance while avoiding late penalties and negative entries on your credit report. Number 4. Build money goals into your budget. It's one thing to state you want to save a specific amount of money or pay off a certain amount of debt. It's quite another to follow through. Building your budget to include your goals rather than just expenditures can ensure that you put money toward your goals on a consistent basis each month. If you haven't already, create a separate budget category for savings. If you have various savings goals, you could divide them into different categories. Assigning a task to each dollar in your budget keeps it from slipping through the cracks. Number 3. Consider focusing on short-term goals first. You probably have both short and long-term financial objectives in mind, but emphasizing shorter-term goals could help you gain momentum. They usually involve less work, so you won't get tired of them. For example, you may be debating whether to begin investing or pay off the last few $1,000s in student loan debt. Focusing on the debt may mean postponing your investing plans for a little longer, but it's a trade-off you might be willing to make if you're ready to get rid of those debts for good. Number 2. Cut unnecessary expenses. Once you have a written financial plan, one of the simplest ways to begin making inroads into it is to minimize as many expenses as possible. This entails getting rid of whatever you don't need in your life. It is really tough to achieve a different financial status if you are overpaying on things while attempting to make significant savings or investments. Cutting unnecessary costs is also a good technique for becoming more financially independent. Things go wrong from time to time. You can lose your job or take a hit in the market for a short time. You don't want to be forced to use your emergency savings every time anything goes wrong. Instead, live well below your income so that you may make major money moves when they come up without being affected if something goes wrong. Number 1. Start with a written plan. Having a clear plan for your goals will help you stay on track. It will outline what you wish to achieve. This is critical when selecting a great financial strategy because it allows you to understand how it aligns with where you want your finances to be now and in the future. In conclusion, overall, your financial situation and your goals will determine a good financial strategy that aids you in achieving those goals. The best approach for you will be based on strong financial concepts and will assist you in increasing your overall savings for now and for retirement. It is critical that the financial strategy you choose is tailored to your individual circumstances. That's the end of the video. I hope you liked it. If you did, let me know by giving it a thumbs up and do not forget to subscribe. Thanks for watching. See you next time.